All right, so we've seen interest rates drop a little bit, but home prices still at an all-time high. Home sellers and buyers, some of them concerned that the election outcome could impact the real estate market. Could it? Well, joining us this morning, the CEO and founder of Rexmont Real Estate, Adriano Torre, is back with us. Good morning to you, sir.
Good morning. Thanks for having me.
Okay, so what do you think? Will the election have any kind of an impact on the housing market? What does history tell us?
Typically, on an election cycle, people who are unsure about buying or selling are going to hit the pause button. People tend to get nervous about how the president's policies may affect the economy and real estate. Historically, though, real estate has never been impacted, good or bad, by the election or election results. And supply and the interest rates have a greater impact on real estate other than the presidential outcome of presidential results, the election results. And since the election results have very little impact on people's income, for the most part, buyers and sellers shouldn't be causing the election cycle or the election season interfere on their decisions to buy or sell a property.
Yeah, and I was reading something earlier saying that historically, economically, the presidential election in the long run doesn't have much of an effect either. Okay, so July had the highest home purchase agreement cancellation rate on record. What's that about?
Yeah, so we actually saw nearly 60,000 purchase agreements getting canceled, equating to about 16% of all pending transactions. Pending sales went 3% month over month and 6% year over year. And so a lot of that is attributed to the sentiment that people had in the market at that time. At that time, the interest rates were nearly 7%. And because of these new announcements that they had on the Feds on cutting the rates, people were putting a little bit, they were a little bit hesitant on putting, the brakes on potentially paying top dollars for a property, which they ultimately could, buy for a lower price, along the way. And so that was the main attribution. A lot of people said out there that, that it could have been the election or what was forming to be the election outcome, but it was more attributed to the higher rates and the anticipation of the lower rates at that time.
Okay, so now that they are starting to come down just a little bit, people are saying, wait, I'm going to wait until after the election. What would you say to those folks?
Yeah, so one of the things that we have to keep in mind is that, I'm reminded of a quote by John Lennon, one day at a time is all we do, one day at a time is good for you. And so when it comes to real estate, we should focus on your long-term goals rather than timing the election. Real estate is a long-term investment. And even though an election cycle may cause a little bit of uncertainty, let's keep in mind that Seattle is a strong market. High demand, limited inventory. And for buyers, right now the focus should be on consulting with different professionals out there, looking into different programs, different options, looking into a website like Freddie Mac or Fannie Mae, which tracks the rates that are being posted every single day. And for sellers, they right now, even though there is a little bit of hesitation in the market right now, we have to keep in mind that the fundamentals are strong. High demand, low inventory, which basically work in their favor.
Okay, so we do expect the Fed, and when I say expect, we've been expecting this for a while, right, for the Fed to make a number of interest rate cuts. We expect this, right? So what does that mean if you want to refi right now?
Yeah, so there are different options that people have out there when it comes to their options of refinancing. It might not be right now to a point that that will justify absorbing some of the costs associated with the refinance. And also we got to keep in mind that even though we just saw this announcement from the Feds of lowering the rates, the mortgage rates have been adjusting down for the last couple of weeks. And so even though there is anticipation that rates will continue to drop, as of now, that benefit goes more towards consumer loans like auto loans, credit cards, personal lines of credits, where the mortgage market, we're catching there, we're getting there, not quite, but it's most likely that as we, come very close to the end of the year, we'll see more options for people who are, looking into refinance options.
Great insight, as always. Adriana Torre, thank you so much for your time. We appreciate it.
Always a pleasure.
All right.